So are investors finally feeling the festive cheer as German ZEW economic sentiment reaches a 4-month high? Looking at this and more, I'm joined by Jochen Stanzl, Chief Market Analyst with CMC Markets. So Jochen, today's ZEW economic sentiment index out a little ahead of expectations at 16.1. Europe's largest economy seems to be gaining momentum after the lows seen earlier in the year. So what are the main drivers here? And is this a trend that could continue into the new year?
In Germany, we have been quite pessimistic in the past weeks. But there is expectations that next year will be more stable, and so somehow we have several problems and several crises in the German economy. But in the end, the economy has been stable, and so going forward, looking into the year 2016, I guess that there is some sense of stabilization and maybe also a sense of a recovery next year. In the end, the ECB has been very straightforward with what they want to do, and regarding 2016, it is still the ECB coming out with a possibility of even more stimulative monetary policy. And so euro-dollar right now has somewhat formed something like a bottom. It might be that the low is in for some weeks, but going into 2016, we still have a low euro-dollar, which is good for the German economy. And so that is together with the sense that the crisis we had in the past didn't really hamper growth in Germany.
Now, this data comes despite the refugee crisis, the VW scandal, and geopolitical tensions creating uncertainty in the markets. Yet Germany seems to have avoided economic pessimism. But how?
If you have read the pessimism in the media when it came to VW, the damage that has been done to the brand name, if you look at the actual numbers, they haven't been hit as hard as the media would have lead you to believe in the end. So it's all, in Germany we have a saying, it's all hotter than it actually is in the end, and so I guess that's the effect that we have for the year 2016. It's all robust, and again, the euro-dollar is very low. So for the export-driven German economy, this is like an economic program, a large economic program, which has been working and has been in place for a year now. And so the effects are coming through together with lower oil prices, which is quite positive.
So let's look at the DAX. What are the main drivers there for the rest of the week?
The Federal Reserve, I guess, is the most important meeting in this year, the first rate hike in 9 years. They didn't do it in September because there was this market volatility in China. And now, tomorrow, they want to do it. And I think that markets, if you look at the positioning in commitment of traders data for U.S. Treasuries, for example, you can see that a lot of banks are actually hedged against higher rates on a 5-year duration in U.S. Treasuries and also on the longer term in T-bonds and 30-year durations. So they actually are hedged against higher rates and higher yields on the bond market in the United States. So the market, you can say, is prepared.
That was Jochen Stanzl from CMC Markets looking at the latest for the German economy. Now that's all from me for now, but don't worry, Jessica Walker will be looking at cotton in her Commodities Corner today, so be sure to stick around for that.